Last week, we saw cryptocurrency prices push strongly to the upside. I think that was probably the easiest play in the market. Of course, we had some plays as well in the Nasdaq 100 and also in gold prices. What happened last week and what can we expect this week? That's what we're going to cover next. Before we start though, I need to stress that trading financial markets may effectively cause you to lose all of your invested money, and sometimes as well even more than your invested money if you're trading with leverage. And what I'm going to share next is not investment advice, it's just my take on the market, and it's made with an educational purpose. So what's going on here? What happened last week then? So stock markets dropped on Monday just to bounce on Tuesday due to the fact that on Monday Trump was saying that the head of the central bank was a major loser for not cutting interest rates, and there has been talks that he was looking to replace Jerome Powell, although it's apparently illegal. At least that's what people are saying. And there is a reason for that being illegal, is because we have seen across history that every time you have the government directly controlling the central bank, then there is a risk that we have high inflation. In fact, we've seen this, causing the complete empires to fall. And it's not just a one-off, it's something that's happened over thousands of years. Roman Empire, for example, is one, and we even have today in the modern world, we have presidents that sometimes have too much control of the central bank. There's one particular country, which I'm not going to name, which have seen their currency drop, I think about 1,800% over the last decade or so, and they're consistently running inflation that is at least double digits, and that is because the president of that country is literally appointing people that are loyal to him, pretty much what Trump would like to do. So that's why the market was selling off. That's as well what bonds have been selling off. Now, come Tuesday, and he said that, okay, we're not actually going to get rid of him, and he has no intention of firing him. That calmed the market. Moreover, Trump is making a U-turn on tariffs, okay? So do you remember, if we jump here to the charts, we're looking here at the Nasdaq 100. This is Liberation Day, and at that point, they introduced these very high tariffs. Market get panicked, dropped even more, and then you had that tit-for-tat trade war between US and China where they're increasing rates, right? That is what caused the move to go down, a completely man-made situation. It's not like COVID-19, for example, although some people say it's also man-made. And after that, Trump has been backing down, okay? So he defaulted everyone to a 10% minimum, whereas China still remains at the highs. But what's interesting now is that we're actually seeing comments like these ones here, that they're willing to lower tariffs on China as well. And that is despite there's no conversation going on between China and the US. What's interesting is that Trump said he spoke with the Chinese, and then later the Treasury Secretary said, well, as far as I know, we're not speaking with the Chinese. And the Chinese themselves said they haven't spoken with Trump. So it's a bit of a confusion here, as usually has been. And anyway, long story short is that we're getting tariffs lower, and that is why we're having this situation. That is why we're pushing to the upside. That is why as well, if you look at Bitcoin, sort of pushing to the upside. Now, if we go back here to other news, which is also really important. So we have the PMIs. So these are the first readings. They're surveys where they ask firms, how many people have you hired? How many people have you fired? Are you producing more goods today? Yes or no? The cost that you use, your raw product, how much has that changed in price, up, down, or unchanged? They take all this data and provide these indices. Now, what you can see here is that the indices is going down. So the US economy is actually growing, but growing at a less fast rate. Now, this was better in a way last week because it wasn't as bad as people thought, okay? So manufacturing actually ticked up from 50.2 to 50.7 and higher than the 49.1 anticipated, okay? That's good. So, and what's also interesting is that they're getting, the US manufacturing sector is getting slightly more business from fellow Americans, so more domestic orders, whereas in the case of they're getting less orders from overseas. Now, the bad thing though is that services dropped sharply from 54.4 to 51.4. And this is actually the biggest sector of the US economy. I think about 80% of all the business happens in the service sector. That's what they do really good. And what's happening here, I think, is people just getting worried about what's going to happen next. But we have also seen sort of reports from places like Las Vegas, also flights to Florida that have come down quite sharply, and we have this as well. So goods from China, for example, coming in by mid-April, they were down by 45% compared with from levels of last year. Okay, so imports directly from China has dropped by 45%, and they think now in May is going to be 1/3 less than what we saw last month. So we are already now seeing less goods coming from China to the US, and people are talking about the fact that volumes are moving towards 2022 lockdown levels. Now we all know what happened at that time. Across the world, people were hoarding toilet paper and other stuff they couldn't get hold of. It is very likely we might see a similar situation in the short term in the US with higher inflation, and people probably not getting, some people as well being laid off, most likely at least temporarily at the port of Los Angeles. Now, it's not all bad. So what's happening here is that on the back of those delayed tariffs on Cambodia and Vietnam, we have having a 56% increase in imports come from Cambodia and Vietnam. So what's happening here is that the retailers, say Nike, for example, they're importing majority of what they think they're gonna sell. I'm speculating now, but realistically, they're importing what they think they're gonna sell now before those 90 days to avoid being hit by those very extreme elevated tariffs. So that is gonna mitigate some of the problems as well. Like the Chinese, they already started last time, and they're actually pushing production to other countries and Vietnam or Cambodia, for example, to avoid, in other words, instead of setting up a shop in China, in the US, which anyway would probably not make sense for them in terms of costs and logistics, they set up in a neighboring country, employ local people there, and then from there produce goods that is then sent to the US. But yeah, this is a bit of a warning of what might happen next. And I think this is also one of the reasons why we should be a bit careful. So in terms of the technical on the Nasdaq 100, yes, we might push above last week's high at 19,486, and we might push towards the Liberation Day high of 19,904. Takes you up here, maybe a little bit higher. But look at that, that's the 200-day moving average. When the price is capped by that 200-day moving average, it's very likely that the price could actually push to the downside. Okay, so it might go up a bit like this, but then realistically push to the downside. So here, from a trading perspective, while the short-term trend is over, look, we stopped creating lower and lower highs, and we can push a little bit higher. I think the risk to reward ratio is better down here, and then I want to see what's going to happen next, because we will have data coming out this week. We have ADP on Wednesday, and then we have NFP on Friday. They will tell us how the labor market is doing. Now, realistically, there's not going to be too much of a big of a change, but there could be with inflation and the labor market over the next 2 to 3 months, unless we have a complete repeal of these tariffs on China. Now, there might be more reasons as well, actually, to anticipate higher stock market prices. So this is something that Trump published yesterday, and he's talking about that there's going to be a tremendous day on Tuesday, and they celebrate the first 100 days of him being a president. But he wants the Republicans to work on the one big beautiful bill, which is going to contain massive tax cuts, okay, and dramatic deregulation and spending reforms. So what's interesting here is that if they would go ahead with this, then this could easily boost economic growth in the US, okay. Also, he has said in a different post that he wanted to help people with less than $200,000 to their names. So that, if that would happen, would actually be good. Now, the only challenge here is that I am suspecting that he's looking to see, because parts of other posts, he is looking to see how much money they can bring in forms of tariffs, and from that then redistribute it. What's interesting though is that, is shops like Walmart, for example, that are talking about problems. So they will have, and Amazon as well, they will have they might be forced to increase prices. So on one hand, US citizens will pay higher because of inflation and less option. On the other hand, they can get tax cuts. So we'll see exactly how that balances off. There's also a huge risk. We have seen in the bond market that the investors are not too happy with the current policies of Trump, and that could of course backfire as we saw in the UK. But yeah, this is something that's coming up that we want to pay attention to as well. Now, from a currency perspective, EURUSD continues to be bullish about 112.50, and I think prices might bounce between 114.19 and 12.50 and bottom out here, and then effectively push to the upside. We talked about a break to 112, that triggering a major pattern suggesting a push to 122.18. And I think realistically, that's not going to change too much. Even if we would dip below here, it's not going to change too much. You have the 200 moving average, you have this very low here. So in worst case, we'll slip a little bit lower and then push up. But I think overall, we want to continue to be bullish. Now, of course, you know, what's happening is you have high inflation in the US, you have lower economic growth in the US, you also have the US government itself cutting on jobs, right? And in the Euro area, we have Germany that is looking to add 5% of the GDP into spending. Now, on the other hand, they're looking to cut rates. But realistically, there will be lower rates in the EU and higher economic growth, which is really what you want. And I think this is, for now, keeping things in track. In the case of gold, you know, when we had that critical comments, you know, that's when we spiked. And, you know, yeah, it's been parabolic, really. And a lot of people now talking about the fact that we might peak up here. And, you know, for now, you know, the price is bullish above 3,187. And I do want to continue to be bullish. If they do these massive tax cuts and they are unfunded, in other words, if they want to sort of, you know, because when they reduce taxes, right, the US government brings in less money. So if, for example, it's anticipated that these tax cuts is not going to generate enough money to compensate for the losses in tax revenue, that the debt will balloon, then I think that people will continue to buy gold. So I will continue to be bullish above 3,187. As you know, I've been bullish for a very long time. And also, just to give a bit of a heads up, even if this wouldn't hold, look at this. This is a 200 moving average. It's way down here. So we could technically go down a little bit here in worst case, but I still think people are going to be buying. I don't think this has peaked just yet, although in the very short term, it looks a little bit toppish. And then this again, Nasdaq 100, just to summarize, we can easily have a bit of a squeeze, but the best opportunity was to buy down here. And right now is still also the best one. The only time I wouldn't be buying down here is if the non-farm payrolls that comes out later this week, or the ADP is like really bad and just causes people to be, you know, afraid of the situation, just send prices down to 16K again. And then this is Brent crude oil prices. So there's some very strong resistance here, and they have a slightly more, so what's happening here, that this is the current contract. So this is usually, you know, where is oil prices trading right now, okay? And right now, we know from the PMIs that the US economy is slowing down. We know from the PMI that the European and UK economy is also doing poorly. So probably if we break below 64.39, we'll probably trade to the downside. We also know from the ports that things are slowing down in the US. So I wouldn't be betting on this to go all the way up to 74, okay? I think break here will probably trade down. And then this is Bitcoin. So I did an article on Bitcoin in regards to M2, global money supply. It does suggest we're gonna go to a new all-time high. I traded a lot of crypto myself as well last week. And I think as well, you know, if we go down to 89, but don't break below 85.50, I think it's gonna be bullish. Of course, if people see that, hey, look, the US economy is just doing rubbish and people are going to lose their jobs, then this is probably not going to go up. But right now, the theme is more on the fact that Trump is backing down, and as well the fact that the economic data is not too bad. That is what everybody's focused on. So I want to continue to be bullish. And you have in smaller coins like AVAX some interesting patterns. You have Ripple as well, which just triggered an inverse head and shoulders early today, April 28th. So you have a few coins there that are looking to catch up, and you have other patterns as well. So you definitely want to keep an eye on crypto, because they're coming from being very oversold to now pushing to the upside. So last week, for example, we saw double-digit returns in some of the markets. Just to finalize, so you have ADP on Wednesday, you have US core inflation on Wednesday as well, and you have ISM on Thursday, and you have NFPs and European inflation figures on Friday. That concludes this week's market update. I hope you enjoyed it. If you have any questions for us, as always, just leave them in the comment section below. Goodbye.